Hello everyone, welcome to our YouTube channel Investment Strategy Educator. If you are interested in investing and want to learn about investing in stock market, then kindly subscribe to our channel and press bell icon for notification of our new videos. In today's video, we are going to discuss about basics of share market part 1 and how does it works. Share market works like a large vegetable market. Now let us take an example of it. Suppose a customer named Rina goes to the vegetable market to buy some vegetables. Rina asked price of the tomatoes to the greengrocer. Greengrocer replied that it will cost 30 rupees per kg. But for Rina the price was too much. She asked him to give it in 20 rupees or else she will buy it from somewhere else. He replied that 30 rupees per kg is the market rate, but for her he will give it for 25 rupees per kg. Now this is called as negotiation. Rate of the vegetables increases if demand increases and supply is less, whereas rate of the vegetables decreases if demand decreases and supply is more. In share market, NSE and BSE works like a large vegetable market. We will discuss about this in detail. Now what exactly is share? Let us discuss this with the help of a simple example. Suppose there is a person named Ganesh. He owns a company A. He earns rupees 10 lakhs annually from his company. But Ganesh is not satisfied with his earnings. He wants to grow his company. For that he needs 100 crore rupees. For getting this amount he has only 3 ways. Number 1 is family, friends and relatives. Number 2 is bank loan and number 3 is share market. So Ganesh approached his family, friends and relatives and asked help of 100 crore rupees to expand his company to a larger scale. Usually family and friends say yes for financing a business, but here amount was too much, so they refused. Ganesh becomes sad and decides to apply for a loan. Here Ganesh finds a risk. If he takes a bank loan, he has to return interest, even if he earns profit or not. Now what to do? The last option left was only stock market. Here, if he sells share of his company to stock market, he does not have to return any interest. So finally, Ganesh decides to sell shares of his company in the stock market. Question is, how will Ganesh sell share to the stock market? For sharing his company share to the stock market, Ganesh goes to SEBI with detailed documents of his company, like financial details, future plans, and history of his company. SEBI is a government body which regulates stock market. After reviewing all documents, it gives permission for IPO. When a company raises funds from the public for the first time, it is called initial public offering, that is IPO. In our example, Ganesh got permission for IPO. Initially, Ganesh is the only shareholder of company A, that is company A is private. After following SEBI process, he offers 1 crore shares of 100 rupees each to the public. Now company A becomes public. In an IPO, a company raises funds from the public and offers them partnership in return. There is a direct transaction between company and investor. In an IPO, the company decides the price band with the investment bank. Generally, an IPO opens for 3 days. The investor has to subscribe to the shares of the company. After that, the share is allotted. You can only buy shares from the company in an IPO. You cannot sell them. To sell the shares purchased in an IPO, you will have to wait for the stock to get listed in the stock exchange. Investors who want to buy those shares, they will buy it from you in the stock exchange and becomes partner of the company. The transactions made in the stock exchange are between the investors. The company is not involved in this. Whether you buy a share in an IPO or stock exchange, you first need to open a demat account with a stock brokerage firm. Stock brokerage firms are mediators. Through them you can buy and sell shares. In return, you need to pay some brokerage charges to the firm. In my upcoming video, I will compare and review top stockbroker companies in India with low brokerage charges. Shares which are bought are stored into Demat account. Trading account is created along with Demat account. You can buy and sell shares through trading account. If you have not opened your Demat account yet, then kindly go to the description of this video. I have provided link of the top stockbroker companies in India with low brokerage charges. India has mainly two stock exchanges, BSE that is Bombay Stock Exchange and NSE that is National Stock Exchange. In BSE almost 5,500 plus companies are listed and in NSE around 1,600 plus companies are listed. Sensex and Nifty are indices made to keep a track of all the stocks. Sensex is the main index of BSE. It is made up of 30 well-established companies. The movement of Sensex depends upon the performance of these 30 companies. Nifty is the main index of NSE. It has 50 companies, also called as Nifty 50. Its performance is based on the 50 companies. Companies which are part of Nifty and Sensex have been chosen from the sectors like pharma, IT, energy, financial services, telecom, etc. Without tracing all the stocks, people get to know performance of the stock market. It is not possible to discuss everything about share market in just one video. So I have added link of Basis of Share Market Part 2 in the description of this video.